All right, we got YouTube going. We're going to go live on Facebook here. Then we're going to have a private session with you guys. Go over all your trades, see where we can improve. It's the importance for success. Okay, streaming should be good for Facebook. Am I live? You guys see me? Am I good? Am I here? I'm good. All right. Ladies and gentlemen, Google reported earnings after hours. We're going to go through that. We're going to go through chart parameters as well as the first day of the Newsbeat Live Open House. We're going to go through all that and more. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many cool things to talk about today. So many wonderful, wonderful things. We're going to go over Google earnings. I guess we'll go over the Newsbeat Live Open House, what happened today, how it went, and what we're actually doing to improve your trading. And I think more and more traders are realizing the power of what we do here, what makes us different than every single thing out there. And it's actually the fewer number of trade ideas that we actually offer as opposed to the higher number of trade ideas we offer. We're going to go through again Google earnings, our precise daily stock levels, our game plan, our forex, and as well as our full stock analysis. But first, you must agree by watching this video that you hold Mark Melnick harmless and legally or liable. God, I don't even know the word. How about you agree to not hold me liable for anything you might hear, see, think, hear, say, read, listen to, translate from this video. If you do not agree to this, you must exit this video immediately. Well, thank you so much for agreeing to that. Now I have to do something for you. So let's take it right over to the charts right here. And we're going to take a look at Google right now. We could see that it's really falling after hours at the moment. And we're just going to go ahead and talk about it here. I'm going to tell you my thoughts on the earnings. That's why all the money managers and whatever, they love the Newsbeat show because we really just stop and tell it how it is. So what Google likes to do is they don't like to project their future. I can't stand when companies do this because it makes it very hard to read. So Google came out tonight with their fourth quarter earnings, which is for ending the fiscal year 2018. They announce it now in 2019. $12.77 earnings per share. That's ahead of analyst consensus of $10.86. As we told you in the room, they were going to absolutely crush it on earnings per share. They did. They were also ahead on revenue, $39.28 billion versus $38.96 billion expected. Those are great things. Nobody is really talking about it. But there's a chance that Google is going to be the next company to get to $1 trillion. Now, I'm not delusional. I see their gap down after hours. So let's talk about that as well. Do you know that Google owns a lot of land? People don't actually understand that Google actually owns a ton of land. The revenue that they have received on their properties was $27.02 billion. Yeah, you want to talk about one of the biggest landlords out there? It's Google. $27.02 billion versus $22.24 billion expected. Traffic acquisition cost was $7.44 billion this year versus $6.45 billion last year. So they're paying that much money to acquire internet traffic. So they're spending more money, $1 billion more. Not a big deal for a Google to spend $1 billion more. They said the paid clicks on Google properties were up 66% year over year and up 22% quarter over quarter. Reports cost per click were down 29% year over year and down 9% quarter over quarter. Reports impressions, I don't want to go into the technical jargon of what an impression is. Some people know, a lot don't. Don't worry about it. They basically said the impressions on the Google network member properties were up 7% year over year and quarter over quarter. So basically, um, more people are paying Google for clickbait. More people are paying Google for clickbait. So basically, you go to a website, they subscribe to Google Ads. This is just the simple, dumbed down version. For people who are not the technical savvy types. I'm not. For example, I had to learn it. Basically, just to dumb things down, to simply be put, you run a website and you want the little ads on your website, the little banners. Now, you could just hire Google and say, just go ahead and run the ads. You won't even choose the ad that's being run. Google will do it for you. And what it will do is it will target things that that person has used on their computer. So, for example, if I'm shopping for, I don't know, a new shirt or a new tie, all of a sudden my Google ads will start spamming me with buy a shirt or a tie here. And what happens is if I go ahead and I click it, even if I don't buy that shirt or tie, the company that I'm clicking on to get to their website has to pay Google. Now that money was up, that revenue was up 66%. Sounds great. Other revenue was 6.49 billion versus 4.97 billion a year ago. They're growing. 154 million versus 131 million. But like, I'm reading it and I just don't really see what was negative about this. The problem is, the problem is they started selling it off before the conference call even started. It actually spiked up initially to $1,178. Keep in mind the stock closed at 1141, $1,141. Spiked up to 1178 and then fell. Now, I was interpreting the earnings recently. I said Apple earnings were not that good recently, even though yes, we were the people buying calls into Apple earnings here and we caught it long. But Apple is a lot more forgiving because Apple's going to become, and again, you heard it here first, the second largest cell phone provider or seller on the planet. It's going to be Apple. Right now, they're number three. Samsung number one, Huawei, the Chinese company, number two, and Apple number three. Huawei's going to be knocked down a notch. Apple's going to be brought up a notch. So fundamentally, I'm extremely bullish on Apple. Not only that, if you remember when we were calling Tim Cook a genius on January 3rd right here, look where the stock went to, right? So the stock has pretty much climbed 30 points since the beginning of January when we called Tim Cook a genius for disclosing that information early. Just remember how every single analyst had a myocardial infarction, as soon as they heard the news, and they pulled out their vampire teeth and their werewolf masks and they started ripping into Tim Cook. In hindsight, they look like little foolish children now. With that being said, Apple earnings were not good. Facebook earnings were not good. Amazon earnings to me were abysmal. I think this is like the Christmas holiday miracle that Amazon is still trading at $1,600. I mean, to me that is just boom, mind-blowing that they're actually putting so much weight behind this company. Is it just the market in general holding up? Maybe, I don't know. But to me, I thought Amazon earnings were bad. Netflix earnings were horrible. And they sold it off and then brought it back up. And again, now I see Google earnings, and these look to me like just on paper. Forget about where it's yes, I could see where it gapped down, and I love people who will wait to see if a stock gaps up or down, and their bias is always with the stock's movement. The Google earnings actually look great. I mean, honestly, out of all five of the companies, this is not water, it's vodka. Out of all five of those, the FANG names, Facebook, Apple, Amazon, Netflix, Google, out of the five FANG names, um, Google actually reported the best earnings. Yes, they did not share what they were doing next year. What was negative? I'm trying to figure out what was negative about Google's earnings. Did you say nothing? I agree. I agree. What was negative about it? What was negative about it? Heck, Even to be part of the Newsbeat Live Open House, you're downloading Google Chrome or using Google Chrome, right? So when taking a look at Google here, to me, it it's crazy. Now, again, that does not mean I'm going to come in tomorrow and look to buy Google. I may or may not. I just like to take profitable trades. And what I think a lot of the Newsbeat Live Open House members, who thank you, by the way, so much for signing up ahead of your deadline for the offer. Thank you to all the girls who are, making this transition for your trading career possible, simplifying it. You're realizing more and more like what we're about. You're realizing, how many emails that I get from you guys saying, "Oh my God, Mark, I'm in these rooms where they're just pouring like 50 to 100 ideas and there's no accountability. There's no accountability. You hear what transparency feels like. All right, guys, I'm watching this name here. I'm watching this name. I'm still watching and I'm watching and this is what I'm watching. This is what I'm looking to buy. I'll let you know if I'm going to buy and I either do it or don't do it. All right, guys, I bought it. Here's my average price. You guys get that here and you get to follow a professional, consistent trader in real time. And that to me is just, I think you guys are seeing the value more and more of that. The value of the community, our community, there was a big focus on all the marijuana names in the pre-market. And no pun intended, or maybe lots of pun intended, these marijuana names are on fire. You saw CGC open up at 49.21, spiked up to 51.81. Even a lot of these marijuana names, they did pull back, like Tilray jumped over $7 off the low, and these are just lots of beautiful trading opportunities. You are going to see, great trading opportunities within, this room. Now, I said something earlier today, which I think was very smart. I said, remember, Mondays have generally been slow. We can't force the action. Believe it or not, there are market environments in which Mondays are phenomenal. Those tend to be in more bearish markets. You tend to have phenomenal Mondays when you're falling down on a Monday. And I basically came out on Twitter and I basically, or not basically, 100% said this. I said, Mondays have been slow. We can't force the action. Remember, number one trait of a good trader are those who wait for the good action to come and trade accordingly. So when I say that to you guys, I mean it. I mean it. And today, like, how many trades did I do? I did three trades. I did three trades. Not a lot of trades. And again, a lot of you guys are going to get acclimated and you're going to get used to what we do here. And like, so for example, in the morning, we were watching Jinko Solar. That was the name I was watching in the morning. I made it very clear. And I was looking for a one and done strategy. So what happened? Stock popped up to 15.95. You look for the break of the first 1 minute candle. Stock got from 15.95 to 16.40. I dumped the vast majority of my position. I was done. Just a quick hyper scalp. To have a stock go from 15.95 to 16.40, a 45-cent move in 60 seconds, less than 60 seconds, to me is a very simple money trade. Is a very simple money trade. Then we were watching Boeing. And again, if you're just sitting here curious, like, well, why were you watching these names? We talk about these names in the pre-market. So you obviously see Boeing on the list here, and you see Jinko Solar, JKS on the list here. And again, we're giving it to you in the pre-market every day. So what you're not getting as an open house member now is access to the Twitter, but you obviously get Twitter access. We're actually not charging you for Twitter access. We're actually encompassing it into one product, so we don't, get into the charge you for this, charge you for this, charge you for this, charge you for five different things, so you could get access. So you actually get everything. Back to the all you can eat buffet reference that I was giving earlier. So we were watching Boeing today, and we're watching Boeing right over here. And this is what's called a high five strategy. Boeing shot up. I was watching it this morning. I missed this move when it went from 388 to 394. Did I cry? Did I chase in? Did I suffer from FOMO or the fear of missing out? No. I basically came right here and I said, all right, guys, the high five setup is right here on Boeing. If we break 392.61, I'm going to buy it here. It didn't. It hit 392.50. I waited. Then it opened up here at 392.21. And I said, if it breaks 392.50, I'm going to buy it. I already talked about the options I'm buying. So when you're, by the way, if you're looking at this like Boeing, this almost $400 stock, you're like, oh God, I don't have the buying power to do that. To buy 200 shares, I need like $80,000, or 300 shares is $120,000. If you're trading options, you could have traded this with a few $100 and done quite all right for yourself. You don't really need a lot of money in options. And that's what I was trading, and I was calling out the options and everything in real time. And what I did here was I literally bought the 392.50. Did I hit a home run? Did I have another 50, 60, 70 grand day? Did I make, $150,000 today trading Boeing? Of course not. At a very small, modest day, very happy with my trading. See, most traders don't realize, the traders who are making seven figures, hitting the gas pedal all the time, they're going to burn out. Talk to any trader that used to make millions and now just sort of backed out and slowed down their game to where they're not really sharing as much or discussing as much, or maybe they moved on to another job. That's because consistency has always been the number one thing when it comes to trading. So we bought through 392.50 here on this 5-minute bar, went to 393.83. You might not think that $1.33 is a big move. Believe me, it's enough to put food on your table. 10 minutes after that, it hit 394.90. I sold out of the last of my position up there, and that was it. And of course, if you sat there and you held it, Boeing eventually went all the way near $400 and it shot up. If you used our new 21 strategy, you would have made money as well. And then I was walking through a little Netflix trade that I made money on, but I don't even care to share that because I want to bring you value right now. So you know what? If you're out there and you're having trouble with consistency, whether whether you're an open house member or whether you're already a member of the room and you're still trying to get there, just keep in mind what we are doing here. One of the open house members asked me a good question. They were like, Mark, how do I let my winners ride and cut my losers short? And I said, that's a Wall Street fallacy. It's a lie. Anybody who tells you that they let their winners ride and they cut their losers short are making money way less than 50% of the time. And if you're saying they're not, prove it to me, because I've seen tens of thousands of traders, and I have yet to see the trader who can make 3 times more when they're right, 1 times more when they lose, by letting winners just ride all the way up. I've never seen it. I've seen traders who let their winners ride, and I've seen traders who cut losses fast, those same traders. But I've never seen the traders make money over 50% of the time. Now, why is that? Never stop to think why. And why is that important? Some of you might be thinking out there, well, it's not important for how often I'm right. It's just important if I make money. And if you think like that, you are going to fail. If you're following somebody who thinks like that, you are going to fail 99.9% of the time. Unless you want to be that one LeBron James, LeBron James misses a practice and he doesn't work out as hard. And LeBron James is going to be fine because he's a freak of nature. He's an absolute animal of a basketball player. Do you want to try to be the LeBron James of day trading? Good luck. Good luck. For every one LeBron James, there's 150 million other people who are not. Now, why am I saying this? What traders underestimate on every single trade is that every trade costs more than the money that you're putting in. Every single trade has what's called psychological capital risk. There's a psychological capital risk for every single trade you do. You might not realize it. Some trades are not even worth it to make money. One of the worst things a trader can do is chase a stock through day highs, day highs, day highs, jump in because they're fear of missing out, and actually make money on that trade. Because what you're going to do is you're going to cement in that trader's head that is a good strategy. You want to know how you become consistent? You think it's these algo strategies that I'm offering that I make money consistently on? Yes, that is part of it, but you can't just do it. Nobody could come to you and say, take this garbage training course that was created 12 years ago or 10 years ago, and the market hasn't changed since then. If there was one, think about it, ladies and gentlemen, just stop and think for one moment. If there was a trading strategy, think about how long trading has been around. How many hundreds of years? 120 years? I'm making it up, right? How long has the market been around? 100 years, 90 years, whatever it is. Do you think if there was one strategy, a secret strategy that worked so well that you wouldn't know it already and every single person in the world wouldn't be doing it to make money as a trader consistently? Why are 98, 99, 97, 95, 96% of traders failing? Why? We all have access to great strategies. So why are you doing bad? Because you're full of psychological toxicity. And if you think my consistent algo strategies are just going to solve everything, they'll solve a lot. See, the funny thing about my strategies are they're designed psychologically. Now, what does that mean? If you just follow my strategies and my methodology and what I do, you're going to heal your brain. You're going to heal your brain no matter where your account has come from. Whether you have a $10,000 trading account that was once a quarter million, whether you have a $50,000 trading account that was 100,000 or 200,000, the whole point to take you from losing money to consistently profitable, it's not just one step. You have to heal your brain. We were talking about the amygdala, that little walnut-sized part of your brain that is probably huge. And you need it to shrink. Doing my strategies will actually shrink the size of your brain. And I know that sounds like you're becoming less intelligent. Quite the opposite is happening. You're removing the toxic part of your brain that is preventing you from becoming a consistently profitable trader. You want to know what causes psychological toxicity? Throwing hundreds of trades at a trader. Buy 50, stop 49.50, take profit 51, and I'm gonna just sit back like this and see if it works. We all know that it doesn't work consistently. For every time you're right and wrong and right and wrong, go back and look at your P&L. You're gonna be down. You're gonna be like, what can I do? I'm following these so-called gurus. And then it becomes even worse because most of the gurus there are full of it. I mean, they'll show you something nice, and then they'll just sit back for a few weeks as they're blowing out money or not doing anything well. Then they'll come out and they'll show you something nice, and then they'll hold back. And it tricks you into thinking that they're doing something right, when in actuality, what they're doing is extremely toxic trading, and they're one of the few people that could pull it off out there. You need to heal your brain before you start making money consistently. I'm one of the most psychologically rich traders on the planet, by far. Psychological capital, I'm one of the wealthiest. I used to be one of the poorest. As a 20-year grizzled veteran, as an intraday trader, you can imagine the buildup of psychological toxicity I had to go through. What I'm actually showing you is how I climbed out of it. Reading a book on psychology, reading your favorite trading book, leaving your emotions at the door when you trade, all these nice little catchphrases do absolutely nothing. In order to heal you as a trader, you need to follow a strict set of rules no matter what. You need to become comfortable with missing the majority of trades, only taking a few trades and being right. You think I'm crying today? You think I'm crying today with my with my sub $1,000 P&L? You think that upsets me? That I was right 3 for 3 today in the market on 3 of my trades and I made money on all 3? I traded so little. You know how light I was today? Do you realize how little I actually traded today? Between options and shares, if you consider every option contract 100 shares, I traded less than 4,000 shares today in total. In total. Why? Because I didn't see the opportunity. And you want to know what sitting around and trading all day is? The prop room mentality, where you're sitting in a room with a bunch of traders glued to their screen and they're all watching, and every single person around you is losing money. Does that sound familiar? Who's making money around you? What, there's 20, 30, 40, 50 of you in a room? How many of you guys are making money? None of you? Oh, but you're trading, right? Okay, good. Why has nobody come out and designed a system that was only there to help the trader? The issue, well, I know you made money today, guys. I get it, Issa. But the point being is if you're going to become profitable consistently, you need to do strategies that benefit your psychology. And there was a study at an Ivy League college that said for every dramatic event that happens in your life, and every positive, really positive event that happens in your life, in order to not suffer, you need to be right 70% of the time. So you know what I did? I looked for strategies in the market which I could implement that would be right 70% of the time. You think I really cared about my P&L? You think I care about what number my P&L says? No. And I know what a lot of you are thinking. Well, if you don't care about what your P&L says, or I also know traders who are right 80% of the time, but the 20% of the time they're wrong, they blow out their accounts. I'm nowhere even near that realm. I make so much more money. My 200th best day, my 200th best day in the past 4 years was significantly higher than my worst day in the last 4 years. Significantly higher. Once you stop caring about the P&L, it comes. Yeah, how many of you guys and gals have ever heard this? How many of you guys and gals have ever heard this? As soon as you stop looking for a boyfriend slash girlfriend, you'll finally get one. It's when you're looking for it, you can never find it. But if you just let it go, it'll just come to you naturally. How many people have heard that line before? Whether you're married or David's like, oh God, he's bringing up the past. He's talking to me. Mark is talking to me. Angela's like, no comment, no comment. He's like, Angela's like, I went on Plenty of Fish. All I found was plenty of jerks. All right. but you guys have heard the saying before. That when you stop looking for it, that's when it comes. It's the same thing in trading. I don't even look at my P&L. It doesn't matter. Yeah, I'll glance up, but do you think when I'm in a trade, I'm sitting there looking at my P&L like, doesn't matter. That's how you make millions of dollars. You don't care about your P&L. You care about being smart. You care about being right. You care about trading well. That is what is going to take you to the next level. Not the crappy, crummy course that you got pitched into. Not the brand new secret strategy. Not my 3 simple rules of trading or my red light, green light, 1, 2, 3, stocks go up, down, left and right only. And because of that, that's the only thing it could do. So now you're going to be consistently profitable. None of this BS that is being fed around you. You want to know the difference between me and the other gurus out there? The other gurus out there are making the majority of their money selling you into their course, selling you into their thing. You know what percentage of money I make, my annual income is running this room for you guys? You want to know, last year was less than 2%. I make less than 2% of my money. However, it takes more than 99% of my work effort. Do you find that funny? Do you find that funny when you sign up and I dump all the monies to charities? Amber has a charity that I'm going to be promoting as well. We got another donors.org thing that came in today. That's real cool. Again, like here, and again, I'm just this just came in an hour ago from Google, right? The students supported through organization is the key to success. They write you thank you cards. Do you think what do you think we do here? If you're really making money consistently trading, why do you do what you do, Mark? Why do you do what you do? You know why? Because I have never been so passionate about this work in my life. You want to know why I made over 300 phone calls in the past few weeks to you guys, giving you one-on-one attention, trying to find out what you need to make you succeed as an individual? You want to know why I do that? Because I believe in something. I believe in the movement. I believe in the power of the community. And I'll say it again as I told you guys today. The most powerful thing about the Newsbeat Live Room is the community. I am a far and distant second. I am second. Beautiful. I'm the one with the microphone talking. How powerful am I? But I am a far second compared to the community as a whole. And what I do is I want to continue to build that community and work with you because there is going to come a point in your life, and I promise you this, it's so hard for you to see now, where trading just becomes easy, where making money becomes simple, consistently. I mean, like constantly and consistently. There's no struggling, there's no trying, there's none of that. It's easy. But you have to get rid of this. Once you have psychological capital in your brain, trading is easy. You could run the same strategies that I do. I'll be more consistent than you. You know why? Because I have more psychological capital than you. The consistent traders have psychological capital. Stay away from stupid random trades and you are going to be successful. Follow somebody who makes money consistently and you are going to be successful. So, with that being said, how about I just show you tomorrow's levels? I time traveled from the future into today, and I came back in time to show you these algo levels. These levels don't always hit, but when they do, they very often give you a great area to buy or sell the stock, buying on support and shorting on resistance. Take a screenshot, write it down, don't tattoo it on your face because these levels will change by tomorrow. In terms of what I'm watching tomorrow, I gave a bearish trigger on Google, by the way. It's gapped down, obviously. Watch 1105 and a quarter. It's an A plus trigger that could get you down to 1076. I mean, it could represent like a 30-point drop, approximately 29, whatever point drop. Definitely keep an eye on that in Google. Again, I honestly thought that the Google earnings were good. I honestly felt they were powerful. I'm doing research. I have a long-term swing idea, another one. Again, as I told you guys, our last one was INSG. Our room cleaned house on it. Our room cleaned house on it. It was our stock of the year. It was our first high conviction long-term swing trade in a while. A lot of us are still in it. I am still in it. And, a lot of us are in from less than $4. A lot of us are in from less than $4. And the stock went all the way to 6. Some people already peeled off half. Some people are still holding. Some people are selling when it goes up and buying on the dips. If you believe 5G is going to be the future, Inseego, I feel, has a very big chance of capitalizing on it. I'm going to give my second conviction trade of the year on Sunday. On Sunday. Members are going to get access to it first. Again, Newsbeat Live Community gets access, initial access. Then I'll disclose it to all you guys. However, there's good news. We have a free open house. You could be part of the Newsbeat Live community right now for the next 4 trading days. Hopefully this 1 week will give us enough things where you could get a really good view of what this room is about. I thought today was a very slow day, a very grind day. Some of you did really well. I made money on a few trades. Hopefully you guys did okay as well. And just real quick, our Forex trades. All right, so it's a little blurry to see, but just zoom in right there. Above US dollar Swiss franc, which is the one above the gray line here. That is an open trade that we had for a while. Here are my 2 new limit orders. Every single day at 7 o'clock, I cancel the orders and put in a new one. I guess you see in big letters here, only open trade US Swiss. These are 2 pending orders. Those are my new trades. You can go back and pause this video and copy them or screenshot them if you wish to follow it. So, ladies and gentlemen, there's a reason. There's a reason why psychology is going to be your key for success. Once you get the psychological capital back in your brain, when how many of you guys are so used to just shorting stocks randomly because they went up too much, or buying stocks because you feel they fell too much, or chasing stocks through day highs or day lows, or just trading random names throughout the day for no reason other than you just want to get comfortable with those individual names. However, for whatever reason, you cannot make money consistently in them yet you keep trying. You are the type of traders that are going to need this more than anyone. Psychological capital. Everybody has a psychological capital sign on their head. It's funny when I walk inside the prop offices around Wall Street. I walk in and I'm walking usually with the owner of the prop firm, and I'll walk in and I'll look in the room, and people will usually know who I am, and I'll say, yeah, hi, how are you? Shake their hand. It's very nice. And I look, and the first thing I say is, there's absolutely, I wish there was no psychological capital in this room, I say, and they left. They're like, what do you mean? Because everybody has a huge negative balance of psychological capital. And psychological capital is what prevents you from doing stupid trades, doing smart trades, and remaining consistent. There's a reason, ladies and gentlemen, why consistent traders swear that the Newsbeat Live Room is the largest, fastest growing trading room in the nation. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.